My name is Jeffrey Kennedy, and welcome to Elliott Wave Junctures. Today we're going to answer a very important question. What is the best way to identify support and/or resistance on a price chart? Now, if we're utilizing trading language, we can actually say, what's the best way to identify a high probability reversal zone on a price chart, one that would most likely ignite a reversal in price or a change of trend? Well, the answer to that question is very simple. Use more than one way. What we're going to be doing in today's episode of Elliott Wave Junctures is we're going to be walking through 5 different techniques to identify support and resistance. And we're going to begin with the US bond because I think we're going to encounter resistance between 136 and 137 that gives way to the resumption of the larger downtrend in that market and where we'll see prices fall to about 132 or 130. Let's begin. Now, what you have in front of you is a price chart of the US bond. And I believe the move to the upside is a corrective structure. It's essentially an sideways up move. And again, I believe we have resistance between 136 and 137. But as I previously said, what's the best way to identify resistance and support on a price chart? Well, again, the answer is very simple. Use more than one way. So we're going to walk through 5 separate techniques today that will actually show you how I actually identify support and resistance on a market. Now let's begin with the standard Fibonacci retracements. As R.N. Elliott wrote in Nature's Law, the Fibonacci sequence is the mathematical basis of the wave principle. For example, when it comes to, say, second waves and fourth waves, the most common Fibonacci retracement for a second wave is a 618 multiple of wave 1. The most common Fibonacci retracement for a fourth wave is a 382 multiple of wave 3. Now in this example, I'm simply doing a Fibonacci retracement or throwing up my fib lines on the most recent decline. And as you can see at 136.03, represents the 382 retracement of the prior move down. And at 137, we have the 50% retracement. So Fibonacci is one way we can actually identify resistance or support on a price chart. Now, trend lines also offer additional areas of support and resistance. And the trend lines we'll be discussing today are not just standard trend lines, but these are KCT trend lines, or Kennedy channeling technique trend lines. The lines you see moving to the downside are what I refer to as base channel trend lines. And the significance of a base channel or the base channel trend lines is that they act as support and or resistance for wave 4. So in this, the signature that this structure is actually forming right now argues that this is a fourth wave counter trend move or a small fourth wave bear market rally. And again, these are the trend lines from the base channel. Now we can also use the trend lines from the corrective price channel. And as you can see here, it appears that we're actually trying to form what I refer to as a center line reversal, something that we've also discussed previously in Elliott Wave Junctures. Another thing we can look at is the previous fourth. According to the Elliott Wave guideline concerning the depth of the corrective waves, whenever you have a 5-wave structure complete, a retracement occurs that pushes prices back into the span of travel of the previous fourth wave, most often ending near its terminus. So previous fourth wave extremes can often act as support and resistance as well. So here's our previous fourth wave extreme in this market. Price gaps also offer excellent areas of support and resistance. Many times you'll see prices move to a price gap and then reverse from it, almost like a magnet. It's very impressive and very reliable, so much so that I look for price gaps, or I'm always aware of price gaps on price charts. Now in this slide here, we don't have a price gap, so we can't point to that specifically. But we also can add another technique to identify support and resistance, and that would be to look at wave relationships. As you know, within a zigzag, for example, the most common relationship between wave C and wave A is equality. The most common relationship in a flat is the same thing, equality. Now, sometimes you see wave C fall a little bit short of that, or even push a little bit beyond it, but equality is what we tend to look for. Now, on this slide here, you can see that equality between wave C and wave A, utilizing the interpretation that we have a running triangle for wave B, that comes in at 137.14. But we also have another relationship, and that's where wave C equals a 618 multiple of wave A, and that comes into play at 136.15. So what we can actually begin to do here on this price chart by utilizing all of these different techniques, 5 separate techniques on identifying support and resistance, is we can begin to identify, excuse me, let me slide that back over. what we can begin to identify is an area roughly right here that should provide a stiff shelf of resistance or a stiff blockade of resistance that will turn prices back to the downside. All I need now to really confirm this idea is to see a break of the lower boundary line of the corrective price channel, and that should clear the way for further selling in the U.S. bond down to about, again, 132, 131. Let's look at another price chart. Let's go through this exercise one more time, but let's begin with this one, Occidental Petroleum. Ticker symbol is OXY. Now, the reason this chart is blank is, again, I'd like everyone to begin trying to label price charts on your own, kind of get an idea of how you would label this price chart, and then I'll show you how I'll label the price chart, which is next. And what I'll be working with in this instance is simply the idea that this is waves 1, 2, that's a wave 3 top, and this is a fourth wave pullback. But let's go back through the original exercise. Number 1, let's look for Fibonacci retracements. The most common Fibonacci retracement for a fourth wave is a 382 multiple of wave 3. Then we have a 50% retracement coming into play at 87.29. Look where the move came down to. So this Fibonacci area between 382 and 50% is an excellent area to look for prices to reverse from. Trend lines. Let's look at our trend lines again. Again, we're utilizing KCT trend lines. We have the center line of a base channel right here. And then we also have the upper boundary line of the base channel coming into play right here. Notice the move to the downside, how it unfolds or is contained within parallel lines. We have that lower corrective price channel trend line coming into play roughly right here. Next, we can look or identify previous fourth wave extreme within that wave 3 advance. That comes into play right here. Notice how prices fell below that. And also on this price chart, we do have a price gap coming into play, and I believe that's 88.07. Notice that the prices came down and closed that price gap on 2 separate occasions, here as well as here. And then we have the wave relationship. In this instance, we have wave C equaling wave A at 88.57, and that's what this center line is right here. But again, notice what's going on in this price chart. By applying all these different techniques, it allows us to identify, again, a high probability in area. I don't like to use a simple technique or a single technique. Again, what's the best way to identify support and resistance on a price chart? Or if we're going to utilize trading terminology, what's the best way to identify a high probability area to experience a reversal in price? Again, the answer is quite simple. Use more than one way. And today we've actually discussed 5 different techniques you can utilize to identify support and resistance on a price chart. The reason I use all of them is because it allows me to identify a cluster of levels, and derived from many different ways, Fibonacci, trend lines. And these aren't the only ways. You can actually use moving averages to identify support and resistance, or other techniques. But again, what's most important is that you use more than one technique. That about does it for today. Thank you very much, and I'll see you later this week.